Hello, everyone. Welcome. My name is Nick Cipolla. I am going to be your webinar host. We have here as well Matt Kersse, who is going to be the presenter.
Hey, everybody.
Just a couple housekeeping items. Because we've slotted this webinar for 30 minutes, I know it's pretty quick. If anyone has any questions, there is a chat feature on the right-hand side. Feel free to put any questions in the chat, and if Matt and I have the time to get to them at the end of the webinar, we will definitely address those questions. And if we don't have time, Matt and I will personally reach out to you and make sure that we're answering those questions for everyone. All right, so we're just going to jump straight into this, everyone. So the topic for today's webinar is how to leverage QuickBooks to increase profits and increase your bid win rate. All right, Matt, you want to go ahead? And so the agenda for today is why you should do detailed job costing and the best way to accomplish it. All right, Matt. All right, so just to kind of jump in here, Matt, so why do construction companies use QuickBooks?
Yeah, Nick, thanks for the handoff. Everybody listening, thank you very much for your time. We appreciate you joining. I'm going to skip ahead here and pull this whole slide up. And what I'm going to start by saying, Nick, and to everybody listening, is that construction is QuickBooks' largest industry user. So let's just start there. They represent, or you all as a whole represent 7% of the total users, and roughly about 13,000 construction companies are using QuickBooks for their accounting. I would imagine many of you are probably part of this group. And then the question really, Nick, that you're asking me is why are these 13,000 people in the construction industry using QuickBooks, or companies in general? Typically, it's because of a few QuickBooks components that have been laid out, and really the simplistic nature of the platform in general, and just ease of access and how much it helps people. Invoicing, budgeting and forecasting, inventory management, expense tracking, and then most importantly, number 5 here, job costing, which is what we're going to really talk about a lot throughout this presentation, is why people are using QuickBooks in the construction industry and the benefits for it as well.
All right, Matt, so what is job costing in accounting?
Yeah, great question. I'm sure many of our viewers are fully aware of what job costing is, but if you're new to the industry or job costing, or really you're just trying to figuring out how to piece things together, I'll kind of start from the beginning. Job costing tracks and allocates all expenses related to a job and or a project. And what it really is doing in real time is it's assigning costs such as materials, labor, equipment, and overhead to your individual jobs. Now, these jobs or project expenses can be really broken down into 2 main areas, Nick. Direct expenses, and some examples of those could be labor or materials, and indirect expenses, which could be your overhead. Now, components of your job costing, you have job cost codes, which are number and name, and then you also have your cost category, which are group related, where things are kind of jumbled together. I want to paint a picture really quick. When you run a job cost report, to be able to accurately account for your labor, that would be an example of a cost code, Nick. So an example again would be a cement mason or a bricklayer. And then you have many types of cost categories, which again, I'm sure many of you are aware of. You have labor, equipment, material, subcontractor, and even administrative related cost codes, which feeds into those cost categories, obviously, as we mentioned.
All right, Matt, so why is job costing so important in the construction industry?
Yeah, this is a very important question. Let's just start by saying you have profit margins, Nick, in the industry, and we speak to a lot of people on the phones and our clients, and this is a lot of a pain point for people when it comes to job costing. So why is job costing important? Well, job costing involves precisely tracking all the costs and revenue related to a specific project, and your accurate cost records are crucial in construction, since the average net profit margins in the industry, which we talk to people about, are 3 to 7%, Nick. Now, if these are off, you're going to have a problem with your profitability. Job costing focuses on tracking and attributing your costs directly to individual projects, contracts, or jobs. And a lot of times your accountants and finance departments rely on job costing for back office processes and tax filing. So if this isn't done properly, it makes their back office jobs a lot worse or harder, to where they want to pull their hair out. And I'm sure many people listening to this are, yeah, how can we make this process easier? I hate doing this Monday through Wednesday. It's a nightmare. Detailed job costing lowers the risk of unexpected costs, preserving your profit margins. So why is it important, Nick? It's because you need to stay within your profit margins to increase your profitability ultimately.
Absolutely, Matt. And I think, with that statistic there of profit margins being between 3 and 7%, if you're estimating your P&L and your labor is off by 5, 10, or 15%, that can really drastically affect those profit margins.
Yeah, absolutely. And if we reference our previous webinar, you have payroll bleeds, you have labor bleeds, things like that people have an issue with, but you hit the nail on the head, and that's a really great point. I'm glad you brought it up.
All right, Matt, so if you can share with us, just some different components of job costing.
Yeah, so there's a few things that we have here listed for you in a little bit of a diagram. There's elements of accurate construction job costing. These accurate job costs are key to accurate future estimating, projections, invoicing, and your statement calculations. Now, we have hourly wages, you have material costs, equipment, risk costs or analysis, and indirect costs. Now, I'll kind of go back through some of these and explain a little bit further. Your hourly wages, you have to include your federal and state paycheck deductions. Material costs, you have to consider fluctuations in supply and customization throughout the time you spend on a project. If you're allocating tools and the use percentage or depreciation of certain tools or equipment, that's something you have to focus on. And then your risk factor or risk analysis, maybe change orders or delays during a project, those can affect your job costing as a component. And then indirect costs, if there's errors in your process of job costing from start to finish, for example, if you're doing your time and attendance manually, that then gets passed to a supervisor who then passes it to a back office admin, which I'm sure many of you on this call are. That can be an indirect cost to your administrators and office costs that could detriment your P&L.
Absolutely. So Matt, what are some of the best practices when we're talking about detailed job costing?
Yeah, so a few best practices. Let's just start by saying you need to assign all of your expenses to your jobs. So these kind of all go into session, and at the end, the ultimate goal is to run a report to see what's profitable, what's not, right? So we want to add our hours spent on the job with the proper task codes. We want to make sure that any job-related purchases, such as items purchased for a job, subcontracted services, et cetera, are all included and accounted for. Any overhead expenses, any mileage, any other indirect expenses, freight charges, equipment rental, et cetera, these all need to be included. And then you ultimately want to be able to run job cost reports to see how your business is doing on a job-by-job basis. And then after you've done that, run a report to see which ones are profitable and which ones are not. So those are some best practices that kind of all go into session to really make sure you're doing your job costing properly and increase that bottom line.
So Matt, why is calculating accurate labor costs critical to job costing?
So, your labor costs in construction projects, as you know, Nick, and with a lot of people we speak with, your labor costs typically constitute anywhere from 20 to 40% of your total project budget. Now, that can change based on the size of the company, the size of a project, that can change, but the average is around 20 to 40%. Now, with your labor expense burden as well, this includes multiple employee-related expenses such as taxes, insurance, general liability, benefits, and even your training costs, which I'm sure a lot of you are already aware of. In QuickBooks job cost reports, the total labor burden is often estimated, and you're going to start to hear this as we progress into the webinar. It's often estimated on the job cost report for each job and or project. Why is this? This is a little bit of a problem that we're trying to solve for the industry. Most of the time, time tracking your payroll systems do not collect your job cost codes properly. So in construction, high margins means labor is your biggest risk for losses. And Nick, we've both touched on this a few times.
Absolutely, Matt. And I think, you and I are going to probably repeat this a little too much in this webinar, but we really want to kind of reiterate that, when you're estimating the detailed labor burden, that is really going to throw off your guys' profit margins. And I think that's really what we're trying to hit home here today.
Yeah, absolutely. The biggest goal here is profitability. So way to hit the nail on the head again, Nick.
All right, Matt. So how are labor expense costs typically collected in the construction space?
Yeah, so there's many ways, and what we've seen most, which a lot of people are beginning to now move away from, is pen and paper, the old John Hancock method. And there's nothing wrong with any of these ways that I'm about to mention. Pen and paper, the John Hancock method, people are collecting time or information through notepads, or paper, or however they do it, maybe a punch in, punch out time card. It's easy to learn. It's easy to pass along. Many people can do it, but there are challenges to these things that we're going to mention. They're prone to loss. They're prone to damage, disposal, and manual calculations, as we all know, are time consuming and very prone to human error. It's a lot like the telephone game. Your employee clocks in, and then maybe hands that card to a supervisor. That supervisor then hands it to a back office staff, and then your back office admin has to call the supervisor and say, hey, were Jerry's hours 8 or 4? What did he actually work? Whatever it may be. But this leads to potential cost miscalculations and ultimately a labor bleed, which is a problem that affects your bottom line. Now, spreadsheets are another thing that we see a lot of people using. People are using Microsoft Excel or Google Sheets. Now, another pro to this is that it's much less time consuming than using the pen and paper method, and you don't have as much of the prone to human error problem or the telephone game issue. There are still challenges, however. There's a certain skill level required for you to be able to use Microsoft Excel or Google Sheets, especially, properly or to the way that you may need it for, producing certain reports. So the skill level is an issue, and then it's generally not something that's shared. A lot of times you have just maybe we'll use Susan. We'll say Susan's our back office admin. You have her. If Susan's out, it's usually not Susan, Deborah, and Michelle. It's usually just Susan. So there's not always somebody to take the place of her if she's using Excel or Google Sheets, and then somebody has to step in and they don't know how to handle this issue or to produce reports when you need them. So that's a problem. Another way is from your payroll reports. The catch with that is that your labor hours and additional labor burden aren't separated by the job and or project, again, leading to problems when you want more detailed reporting. Things are grouped together. Typically your labor expenses, Nick, are manually added to QuickBooks as a total expense, meaning, again, your labor burdens are not separated by the job and or project when it comes to your QuickBooks job cost reports. And again, that's how we need to move away from some of these group codes and then find a way for the industry to have an employee clock in and do more accurate job costing from the employee, the task, and the minute versus grouping these things together, which a lot of people are doing, which is what you're going to hear again, actual versus estimated.
All right, Matt, so what is the real value here of detailed job costing in construction?
Yeah, so I'll start by saying the value is profitability. Let's just say that. I think everybody's main goal is profitability. We want you to make money. You want to make money. I'm sure the company in general would like to make money. So we'll talk about your income statement or your profit and loss statement, your P&L. This summarizes the company's income, expenses, and profit over a certain period of time, as we all know. However, this also requires the gathering and assigning of all of your direct and indirect expenses to each job and or project, and not just assign them, but do it properly. So detailed job costing is absolutely essential to determine individual job and project profitability. And I know this seems like a redundancy, but this is kind of where people in the industry are missing the ball. Detailed job costing allows estimators to measure your bid accuracy. Again, you keep hearing this brought up over and over again, Nick, through actual versus estimated calculations. Many people we speak with when we have talks, about their pain points, it's that they're estimating or guesstimating their calculations. You need actual versus estimated. Estimators need accurate and complete historical job costing for your future bids to keep you inside of those profit margins, Nick, and then ultimately to increase that bottom line.
Absolutely, Matt. And, for everyone listening here, especially the owners and the estimators, how would a 5, 10, or 15% swing, really affect, how you're bidding and estimating these jobs? I think Matt and I have said it over and over again, but, the actual versus estimate is so important.
Yeah, and I think, Nick, to your point, it would even determine whether or not they even decide to take that job based on the swing. So yeah, it's nail on the head again. You keep bringing up really valuable points, and I'm glad you touched on that.
All right, Matt, so if you could tell us, just some best practices on how to be more efficient with QuickBooks.
Yeah, so I have 5 factors to consider when performing detailed job costing, and I kind of broke these into 5 sections, but really it's in succession, and it all should just be one big practice that you do, as a whole. And we'll kind of touch on some of the things we briefly spoke about as I go through these 5. You want to enter your data once, right? Any additional steps and errors and time are unnecessary, and that's, human error, the phone game. Those are things that we want to remove, right? Enter data once and let's do it the right way. You want to embrace automation, right? What do I mean by that? You want to take number 3, where you're leveraging technology, find some sort of a platform and a time and attendance and accounting software, just like QuickBooks, and leverage this technology, embrace the automation, remove these third-party people or multiple people in your process, and consolidate it down to one great system, one awesome person in the back, which is, I'll keep using the name Susan, and let her handle this by using the technology and embracing that automation. And then by doing that, it'll help you prioritize your data quality, right? You'll have cleaner reports, cleaner documents, and then you can find out, again, to the previous slide's point, find out which jobs are profitable or not profitable, right? It'll help you with bidding. And then you want to invest in your team with simple, easy to use tools, such as a time and attendance platform. QuickBooks has something called T-Sheets, which is now called QuickBooks Time. That's a really great way to give your team a tool to be successful. And that, again, can be permission-based in the field. You know, a supervisor can have it on a laptop, a tablet. The employees can use it on their mobile devices. And this is an example of moving and leveraging that technology in the future, growing your business with the technology, and then giving your employees easy to use tools and increasing success, which again goes back to staying in those margins and increasing your profitability.
Let's please help Susan, huh?
Yeah, Susan needs all the help.
All right, so Matt, some recommendations for capturing labor expense job cost codes.
Yeah, so when you're capturing time, the employees really need to be making sure that they're identifying the job cost code, and the accurate punch in and punch out down to the minute. I want to analyze, again, here we hear it again, analyze estimated versus actual labor expenses for future bidding. Now, I'm going to focus on the employee because that was the first part. When we say analyzing estimated versus actual, on previous webinars, we've spoken about maybe Jerry clocks the other guys in who are at McDonald's getting breakfast for everybody. We got to move away from estimating, and we need to move towards actual. And any of this job costing, any of this clocking in, clocking out, bidding, all the estimating has to be a thing of the past. And we need to prioritize the quality data, like on the previous slide we just spoke about. Use this detailed time tracking for your accurate payroll. It's plain and simple. Use the detailed time tracking for your accurate payroll. Make things easier on yourself. Remove these extra steps. And then add the detailed labor expense costs to QuickBooks Job Cost Report to create your P&L for each project statement, right? And then again, after those are done, then you can look at those and say, hey, this one was profitable, this one was not. And we can kind of build on that to, you know, make our business improve, and again, put more money back in our pockets, which could end up being, Nick, a work truck or something else that could go back into your business instead of losing this money because of estimated versus actual.
Absolutely, Matt. All right, so if you could just quickly here show us, best practice for capturing labor expense, and really what does that look like in the payroll, time and payroll process?
Yeah, here's where I get really excited, because this is where we can impact the industry directly and move you forward, essentially, away from the manual John Hancock method, and then prioritize that quality data and just really make things easier on yourselves as a company and a business. So time tracking with detailed job costing codes looks a lot like this. And I'll use QuickBooks Time, or T-Sheets, right, as some of you may know it, as the example. Workers are feeding their punches directly into a system. And on the left-hand side, you see this time submitted on maybe a mobile device, a tablet, or whatever you have in the field for your employees, right? And that's the example of giving your employees easy tools to use to be successful. And you're removing timesheets or re-entering data, which is, again, the John Hancock method, the phone game, where we're passing this information to multiple hands, where we're prone to those errors. And on the right-hand side, you're looking at them recording time, the job, and the job cost code properly, which is going to give you that clean data, those clean reports. And Nick, I'll take the lead. I think your next question would kind of be like, hey, what happens once that's done? How do we get it into our payroll system? Well, guess what? Here's the great news. It auto assigns those wages with your time submitted when those employees clock in, because you gave them the tools to be successful, right? And it's also going to auto error monitor these punches. So instead of having tons of errors, say, oh man, we got to go back and fix this because he clocked into the wrong job code or the wrong job site. Well, many of these platforms now, with this technology that we're leveraging to give you the clean data, have geofencing capabilities to where you can't clock into the wrong job site, or you can't clock into the wrong job code. Let's say, for example, you were supposed to be an electrician, in the morning, and at nighttime you're a drywall person, but they tried to clock into something else. A lot of times you can remove those other job tasks so they can't even clock into them to begin with, or they can't clock into the job site because that geofence is there. So then when this auto assigned wage and this job costing sends it into your payroll, you're already ready to go and it's already submitted for you clean and easy with no errors, right? And then lastly, Nick, what happens after we have the labor expenses from our payroll? Where do we send it, right? We send it to our accounting software, which is QuickBooks, which many of us, I'm sure most of us on this webinar are using. But now, instead of us having these human errors, the phone game, the problems, or maybe things that you have to call back to a supervisor and again say, hey, Jerry had 8 hours or 4, I can't read this because it's illegible. Now I have accurate, detailed data. And if you look here on the right-hand side, this is a clean example of one job at 123 Main Street where I have multiple line-by-line details where I can now have clean reports to then say, hey, here's all my data. And then from there, again, to the previous slide's point, we can go back and say, hey, this job was profitable, this one was not. Let's build off of this and increase our revenue and our profitability as a business, because now, not only do we have the tools to be successful, but now we can put more money back in our pocket.
Absolutely, Matt. And just to kind of recap those 3 slides, because I think it's really important. So, you've captured the time. That time is then flowing into the payroll, which then will flow into the accounting package, which is going to produce a clean and accurate P&L. And I think that's really just the point we're trying to get across here.
Yeah, great job, Nick. Clean, accurate data, make things easier on yourself, and let's do it together. This doesn't have to be you feeling like you're alone. A lot of people have these pain points, and that's why we're here to present this to the general public. Hopefully some of these things you can embrace or they resonate with you, and we can help move you in a forward progression.
Absolutely, Matt. All right, well, thank you for that. We definitely just want to summarize some of the key points we just went over. So Matt, go ahead.
Yeah, so in conclusion, again, I'm really excited about this, but the conclusion is, the title of the webinar is the secret weapon, right? The secret weapon is your accurate, detailed data. I think, Nick, you would agree that's the gold, right?
That is the gold.
Yes, sir. So through this webinar and these slides, we talk about the value in QuickBooks and construction. Again, very simplistic platform. A lot of things that help you throughout your process have been laid out very easily for you in a platform that's not difficult to use. And over time, QuickBooks has adopted other things to help you, again, such as T-Sheets or QuickBooks Time. You're using of the detailed job costing to gain insights on your P&L. And that goes back to the example of, hey, which jobs are profitable, which ones are not, right? This is something we touched on and how we can increase profitability for your companies. Components of the detailed job costing, job cost codes, job cost groups, what falls into those categories are some things that we went over and touched on. And lastly, the best practices of detailed job costing. And I think that we could agree, Nick, that automation, simplifying the process, less hands in the process really is kind of the best practice. And then giving everybody the tools to be successful in the easiest way possible that will produce that profitability and those clean, detailed, accurate data reports.
Absolutely. All right, everyone. Well, thank you so much for sitting through the presentation here. We just kind of wanted to give you a little teaser on our next webinar, which will be happening on June 13th. We are going to be talking about optimizing the construction payroll office with technology, the importance of payroll optimization in construction, and we're also going to share some case studies and some different success stories, that we've had in the, kind of optimizing the construction payroll office.
Awesome. Thanks for that, Nick.
Absolutely. And Matt, it looks like we do have a couple more minutes here. So I do have 2 questions in the chat.
Okay.
So first question here I have is, what if I'm not using QuickBooks for my accounting package?
Yeah, that's a great question. A very reasonable question. So there's many accounting platforms out there. Just because you're not using QuickBooks doesn't mean that you wouldn't be able to adopt certain technologies or softwares out there that will do the same things that we're kind of touching on here today. A lot of them are very similar. So I would say to you, it's not very difficult to implement some new software technology. A lot of these integrate fairly well with each other. And then you just really have to find what's right for you. But many of these things, as technology improves and advances, are at your disposal. It really depends on the type of jobs you're doing, what fits your wheelhouse best, and what you guys want to adopt.
Perfect, Matt. All right, second question here. User is saying that they're using QuickBooks for accounting and payroll. How hard is it to automate a time and attendance and payroll platform?
Yeah, another great question. The answer is it's not very difficult at all. Now, there is a time process involved in this. many times, I'll use our company for an example. It could be, anywhere from 30 to 60 days of an implementation period to kind of switch over. If you're completely manual, you're just really adopting or replacing the John Hancock method and kind of attaching that. Like, for example, if you were going to use QuickBooks Time and just add it to what you're already doing in QuickBooks, I would imagine that's a very, very simple transition. If you're going from manual to, completely automated, you may want to take some people who are more technology savvy, let them kind of adopt it first and let them spread that to the rest of the group and inside of your business. But to answer your question at face value, it's not very difficult. It's more so that we're seeing people who are just kind of afraid of technology and moving in that direction. And I think somebody said, when you're afraid to jump, that's when you should jump exactly at that moment. So don't be afraid to jump. I think that's when you should take, a chance on your business and say, hey, these are the tools that can make us more successful and increase profitability, as we've kind of gone over on this webinar. So if you're scared to jump, I would say now is the time to do it. Just go for it.
Absolutely. All right. Well, that is all the questions we had. If anybody in the audience would just like to kind of see a more powerful yet simple way to kind of performing detailed job costing in your business, Matt and I would be more than happy to schedule a 15-minute phone discussion just to really kind of tell you how eBay can help improve the accuracy of your QuickBooks job costing reporting. So please feel free to reach out. And on my behalf, I just would like to thank everyone for joining today. We appreciate you taking the time out of your busy schedules to join us. And Matt and I really appreciate your time.
Yeah, I want to take Nick's lead. Thanks again to everybody who's taken the time out of their day to listen to us. I'm sure that we just threw a lot at you, but we're grateful that you guys are willing to listen, and hopefully some of this resonates with you and can improve your business. As Nick mentioned, we'd be very, very happy to discuss, even just to answer general questions for you, a 10 to 15-minute call, send us an email. We'd love to see how we could maybe fit into your world or improve your back office processes, increasing that profitability. So thanks again, everybody, and we hope to see you at the next one.
Thanks, everyone. Thanks, Matt.
Yeah.